What's up guys, if you're new to the channel, my name's Jay. Today I'm going to be talking about Dropbox stock. Now this is a stock that I had actually bought before Jeremy on Financial Education made the video on it. I did sell the position though, and I'm not really sure if I'll really be getting back into the stock, but I'll explain why as well as what Dropbox is and how much I see them growing in the future. But first, I'm explaining what they do as a business because you wouldn't be able to call yourself a smart investor if you weren't watching this video and learning what they do as a business. But when you look into what Dropbox is, they started off basically as a cloud storage company where you could literally just store anything from what you're working on, whether it be personal reasons or for work, and then access it from another computer, phone, or tablet anywhere else in the world. And now they're transitioning to more of a modern day type of workspace where you can literally just sit on your couch in your PJs and work your 9 to 5 from home. And honestly, this transition to this type of platform could not have been timed any more perfectly because there's a bunch of people that are still afraid of getting the Rona, and it's for good reason too. So this could massively help their business bring in more and more customers over time as working from home becomes more of a normal thing than going to the office. Because you can probably guess that even with a vaccine, the Rona isn't going anywhere. Just like the flu 100 years later, there's still people unfortunately dying from it every single year. So using this sort of platform could be much more beneficial and efficient for people who run their own businesses and have their own employees. And Dropbox already has a bunch of users who use the platform for this specific purpose. The one thing I'm very curious about is if you're looking to invest in this company long term, and I think of long term as 5 to 10 years minimum, then where do they go after moving to virtual workspaces? I know that it may be a little early to tell and only time can give you the answer to this question, but I was really thinking what can they do, and I really just couldn't think of anything that they could do after virtual workspaces. And that's part of the reason why I sold, honestly, because with Tesla you see a vision. You see autonomous driving networks, Tesla Energy, and them continuing to sell their EVs. I know that I probably shouldn't be comparing Dropbox to Tesla because I definitely don't see Dropbox as one of those companies that gives you Tesla type of returns. And that's not me trying to talk down on the company or anything. I just don't see Dropbox being the type of company to be over $2,000 in the next 10 years because Tesla's a once in a generation type of company and you just really don't get those type of companies. I also know that not being able to know where the company is going to be in the next 5 to 10 years is going to be exciting for some investors. And I personally, and when I say I mean me alone, me myself, would think that I'm leaning more towards speculation than investing if I were to do that. But in no way am I saying that this is a big spec stock like Nikola or something like that. Dropbox has a great business model and a great CEO in Drew Houston, and I've actually watched a couple of interviews on him on CNBC, and he just seems like a really great CEO, so I really have nothing bad to say about him or his company. Anyways, moving on to the most exciting, appealing, and actually most interesting reason why this could be a good buy is their forward PE ratio. Now this might be a little boring to some people, but I'll try to make it as less boring as possible. When you look at it, they're trading at a forward PE of 25, which is really low compared to the other people in the same industry like Microsoft and Apple and all of them. And this is almost the lowest it's been in the past 5 quarters, meaning that the company doesn't have much of their future revenues or earnings priced in, especially from the workspaces platform. And this could be a perfect example of what one of the goats of investing said, and you've probably heard it before. It's buy low, sell high. If you look at the charts, the stock actually finished the day off, and it's August 25th, the day I'm recording this video, at a price of $20.14, which is relatively low if you're looking at a 2-year chart. But if you go back to their IPO, their all-time high was around $40. So compared to that alone, you'd be making over double your money. And if you're watching this video because Jeremy from Financial Education said he was putting over $70,000 into the stock, then I can almost guarantee you, I'm not going to say that this is the reason, but I can almost guarantee you that the reason that he put his money into the stock is because of the value that it provides for the cost. But remember, when it comes to value investing, you're trying to buy $1 for 50 cents, and that's basically the general consensus, did I say that right? Consensus around it. And that's basically something that Jeremy prides himself on. The reason that I personally don't know if I really want to get back into the stock is because their growth has been slowing. And although it hasn't been at like a really fast rate, it has been slowing. I still see them continuing to grow anywhere between 10 and 20%, but they were just growing their revenues by 25 to 30% 2-3 years ago. But there is another reason why I have concerns. Now, the other reason is they have competitors like Google and Microsoft in the same industry as them. And if you're looking to invest in the stock long term, it's really hard not seeing them being bought out by a big company like Google, Microsoft, or even Apple. And when you have big dogs like them as competition, it's so hard to compete because they have the cash and some of the top software engineers in the world. So they can do exactly what you do, but better, and offer it at a cheaper price, which is going to take away market share from a company like Dropbox. because their employees probably aren't as good as the ones at Microsoft, and they definitely don't have as much cash as Microsoft does. So personally, I just don't see myself investing in the company from a risk to reward standpoint. And when I say risk, I mean someone like Apple or Microsoft buying them out, because it very well could happen. And I personally just don't want a company that I own to be bought out by a bigger one. But with that being said, if you made it this far in the video, please go ahead and hit that like button and subscribe. It means so much. Also, don't forget to comment down below if you own Dropbox and what your opinion on Dropbox is. I actually really want to know. But I'll just end it off on that. I'll see you guys in the next one. Peace.
Bye.